This week the markets have been so excited. The average interest rates were the lowest they've been in a year, but we'll probably give some of that back in next week's average. Wall Street's betting on a 100% chance of a Fed rate decrease in September. Now it's just between if it's going to be a quarter or half a percentage point. I personally bet on a 0.25% cut in September with the conservative approach from the Fed. We have seen how just talking about a cut has drastically influenced the market, so the smaller cut will still be impactful. Another big note is Wall Street thinks we'll cut 1.25% by January. For reference, 1 week ago that was March, 2 weeks ago that was June. That seems overly optimistic to me, but if it holds true, it'd be a good reason to wait a little bit longer for refinance. It all started with an employment report, which I agree with Freddie Mac, it was an overreaction. Unemployment claims are going the wrong way, but for reference, it's equal to about April 2018. You can also see that the bond market already calmed down after the reaction. The stock market made big negative headlines this week, especially the Magnificent Seven. There were huge losses, but don't forget the huge gains. We're back to where we were in May and June. The NASDAQ is still up 12.83%, which is lower than average, but not awful. And the S&P is still up 12.15%, which is about average. Here's a table with different lengths of time of averages for your own reference. As always, for questions about this data or mortgages, let me know.